Ladies and gentlemen, we are back live, baby. Ready to talk about this crazy market with yours truly, Ling Ling. Of course, she's the star of the show and loves to be on camera. Say hi. Say hi, Ling. Say hi. Say hi. Can we get a Thursday bounce? Huh? How about that? She says, nah, just Coco. But that's alright. That's alright. We are in there, locked in, ready to go. How are we all doing tonight? Baby. The carnage is real. Relentless. You know, Dada been losing lots of money, huh?
Hey.
You know that, right? Ugans, Jason Henry. What is going on? Kane Northrup. We're doing okay. We're doing okay over here, brother. I mean, if it depends on what your definition of okay is. But look, Coco, little baby, Coco. There you go. Can we get a definition of okay? Huh? Can we get a definition in here? Because what is okay to you guys? Like, are we okay with what is going on? That's the real question. Is it bleeding but hopeful? Squeeze by June 3rd. Highlight this message. Well, let's get it. Isn't that when AMC squeezed last time? Or am I mistaken? I don't even have it pulled up. June 3rd. It was around that time. June 2nd was our peak. So June 3rd. Wouldn't that be ironic? Michigan in the house, brother. Oh, same here. Same here. Across the mitten. Brrr. Brrr. Portfolios are dying, but that's all right. You know, in the grand scope of things, you guys got to remember, this is where the money is made. It's easy buying a stock one day and making money the next day, but during a good market. But if you want to make a lot of money, most millionaires are created during times like this. So buckle up. It's good. AMC equals okay. I can agree to that. Yo, K-Pot, what's going on, brother? AMC dead at this point. Everything's collapsing and ain't nothing squeezing. No, I think we had this conversation the other night as well. You got one part of it down, yes, but just because the markets fall doesn't mean that AMC is going to squeeze or go up at all. I actually expect it to go down when the markets go down. I don't think AMC is going to be this standout performer during all of this. What is, after all, Amazon went down, or Apple went down 5% today. You're starting to see a full-on washout. Now, in this lower liquidity regime, this marketplace that we are in, even a small catalyst like AMC, maybe it's a big title, maybe it's AMC starting their credit cards. Maybe it's AMC starting their popcorn business. Or what I would expect that would be seen as a major catalyst would be AMC coming out and buying another stake in a company like we seen last time around. Massive rally, right? Something along those lines. A small catalyst can turn into a big deal for stocks during this environment. Or even like months from now, you're not going back to funny money in 2021. We're not in the same ballpark. You know, it's like rugby and football right now. You know, we are playing football. We were playing rugby before. Makes sense? But yeah, shorts clearly making so much money right now. Well, that's the interesting thing. Believe it or not. Look at the UVXY. It was down today. Get the fuck out of here. What are you talking about? It was down today. Psh, that means that there's not, like, even the VIX was down today. Like, it's still elevated, but the NASDAQ dropped 3% and the VIX was negative. Do you guys know what the VIX is? The VIX is essentially is something used to, or it was created to show fear in the markets, right? But how it works is it goes off of put and call options, the daily volume on the SPY, on the S&P 500. So typically when the markets are down a lot, the VIX should be up a lot. It's like an inverse. You can hedge out your portfolio in that way, but it tends to go down over time because people are only fearful for small blips. So you don't necessarily want to like buy and hold the VIX. It's more so a trading instrument to kind of give you the gauge of the markets. Now, when the VIX is down here in the like teens and 20s, that's when the markets are, not feeling too fearful, right? Things are relatively good. Now, when you get these spikes, you can expect the markets obviously going down, and we've been getting spikes. We've been on a rocky roller coaster with the VIX as well. Before the last Fed meeting, we peaked out at like 37. I believe that was intraday, and then right after the market started to rip, you guys remember that, right? The VIX hit a low of 18. Now it's back up to 32.56, which is very elevated still, but you're not seeing the same level of panic right now, given the VIX. So, believe it or not, as far as puts, you're not seeing that much activity relative to what we have seen even back here during the first drop of the S&P 500 back here. Like, you've seen more puts back here than you are right now. Now, I will say the overall open interest of puts to calls on the S&P is much larger now, with a put to call ratio of about 1.6, meaning, for every one call somebody buys, there's about 2 puts that somebody buys and somebody is holding. But on an intraday basis, you're not seeing that same level of fear. So I think a lot of people right now are sitting in cash. Or they're going into like oil, more defensive stocks, which I hate that. Never fall victim to that. When times like this come out, Wall Street tells you to go ahead and buy like Coca-Cola or something else, which is fine if you want to buy those companies. But they become really expensive right now. Like a Clorox or a Coca-Cola should not be trading at twice the valuation of Facebook, even though I hate the company, and it's a more personal thing. They blocked me on there a couple times. Let's not get too far into that. The valuations don't make sense in a lot of those companies, but that's what you are seeing playing out. So it's not necessarily people are fearful, just money is not moving to the largest weightings of the market. I believe the NASDAQ for, the NASDAQ, Microsoft is about 10%, and I believe Apple is like 13 to 15% of the market weighting of the NASDAQ. So just Apple's 5% drop today caused the NASDAQ alone to drop 0.65%. The drop on Microsoft we've seen today caused another third point drop. So overall, you're sitting at about a 1% drop on the NASDAQ today just because of Apple and Microsoft, not to mention, Amazon, Google, or any of the other NASDAQ 100 stocks. So you're just seeing a big rotation into stocks that don't really move the markets. Does that make sense? Not all dollars are created the same when you're talking about benchmarks here, but by and large, a lot of people are just holding on to a lot of cash. A lot of people have got margin called and liquidated on. That is public data, and you see the margin levels going down. So there's that. What's going on, Cheese Chaser? Ken Griffin, what's going on? Wrong. The only big catalyst could give is a dividend period. Not necessarily. Not necessarily. It's kind of just where we are in the markets right now, like this day. you got to give it to some time. Granted, a 1 day situation does not make or break anything. But like today, all retail stocks, like my whole portfolio, I think I was down 15% in my portfolio. Like that's ridiculous. Square, large holding for me, down 16, 17%. AMC, large holding, down 15. SoFi was actually positive. What? 5% or 4.5%. Affirm down 15%, like getting absolutely mollywopped on all of these stocks. Today specifically was a very bad day for those kind of stocks. And probably seeing those margin calls and just the fact that Apple is getting liquidated. Why would you not sell other stocks if Apple's getting liquidated? But that's the funny thing. I don't even think there's a lot of selling going on, but under the surface, I really think there's two things. There's the margin call, so people that are over leveraging margin, that are getting margin called, they are forced to sell. So that's some selling power. But the real problem here is there is a lack of buyers, and just overall there's not a big reason to buy. But there's not that many people selling at this point. Just like with the examples I give with AMC, like why is there a day where there's more buying activity on AMC but the stock drops 5 or 10%? There's more dollars heading in but the stock still drops. It's the velocity of buying. So there's not really even a reason right now to buy stocks. We haven't had good news in like 3 months. We have had zero good news in a very long time. Think about that. Put that into perspective real quick. CPI has been bad. Earnings have been pretty bad across the board. Like, they're not terrible, but it wasn't like very impressive. They all had bad things in them. They all had bad things to say for the most part, besides Tesla. So you got that. You got the Fed that is hawking down on inflation, that's talking about doing the fastest rate hike cycle in 40 years. You got China shut down, more inflationary pressures, second largest economy in the world, likely in a recession, doing what they're doing with COVID. Europe heading into a recession right now, a war in Ukraine with the looming threat of possible nuclear war at any time. You have not had any good news. That's the problem. Like, if China would open up, or even the war in Ukraine ending, the markets would probably rally 3 to 5% that day, because you've had no good news. Like, which it's like short-term good news, right? That's not going to fix all of our problems. It's not going to make the markets bounce back to new all-time highs. But what it will do is give people a reason to buy. Now, I did see your comment. He said, it's over, bro. It's going to be a depression. See, and thank you, Sierra the Noob. Appreciate you. First super chat of the night. Shout out to Sierra. But it's not going to be a depression. You want to know why? Because depressions, long-term recessions, anything that is really, really bad has underlying fundamental issues, has problems, right? Like 1970s, 1980s, when inflation was ridiculous, the Fed had to, push the economy into a very deep, long recession. What was the underlying issue there? What actually happened? Well, a lot of things happened, but to name some of the more important things at the time, the dollar was taken off the gold standard. That would be, you don't get any worse than that. Like, you go from being able to turn in money and get gold, and now you get paper. Of course you're not going to value it the same. Hyperinflation, you have to bring interest rates dramatically higher, right? That was obviously a big deal. Now, on top of that, a lot of people don't realize about the 70s and 80s, it was all political, and they started spending a lot of money. That's where modern monetary theory comes into play, where essentially you can just print your way out of any problem. As history has showed us, every single demise of a leading superpower at the time, it always came back to inflation, devaluation of the currency. So that's why it's such a big issue for the Fed. But nonetheless, there's no systemic problems right now that you could clearly see, which is a good thing, but it could turn out to be a bad thing. Like, Like, oh wait, you had the real estate sector going down, but it was different, right? It was very, very different, because if 12% of people defaulted today like they did in 2008, that was the highest default rate, roughly 12%. That's not good. That's not good, but banks could handle it now. You wouldn't want to own bank stocks, granted. You might want to have some puts in the markets, but that wasn't even the real problem. The problem was these banks were just betting on bad CDOs and MBSs over and over and over and over again. And then once the fucking shit hit the fan, they lost on their loans. They lost on all of the collateral on these bad loans. They lost everything. Bear Stearns, Lehman Brothers went bust. That's when shit really hit the fan. Real estate had been going down in value for the last year, or a year and a half, 2 years, something like that. I believe around 2006, 2007, the real estate market started to actually come down incrementally. It wasn't like a huge crash until the end. But it took a while, right? So you don't really have anything like that. Like, good luck trying to get a mortgage, especially over the last 2 years, without 2 years on a firm, 2 years on the job, proving all the money you make, having it proven on tax returns, verifying with your employers, getting signed documents. There's a lot of other things too, depending on your state. So you don't have anything like that now. But what I will say about the current markets is we are one really bad thing away from getting a full-on market liquidation, or we are one really good thing away from seeing a fucking market rip. You're in a very, very vulnerable state. We're under $400, but we don't have a real reason to sell off stocks besides this perception of seeing a deep recession, which the markets are kind of firmly pricing in. So if we get this little paper recession next quarter and GDP is negative, we're in a recession. The markets would probably rally off of that, right? If they figured it wouldn't get worse. The last GDP print we got, the markets rallied like 2.53% that day. Not a huge deal, but you do have the concerns about obviously growth slowing down, and we'll see if some kind of Billy Wong catalyst comes again. Hedge funds, multi-$100 billion hedge fund or something goes under. That's going to be a big problem. But as of right now, we don't have any real systemic problems in the economy. And it's because of 08 and 09, people are a lot more on the careful side to make sure that obviously does not happen again. So in terms of a recession, that's going to happen. That's 100% going to happen at this point. If anybody tells you differently, they've lost it. Now, if somebody tells you there are systemic problems in the economy, they have also lost it. Very different ballparks here. So this is the kind of year where you don't really have to panic to buy the dip, because the Fed's not going to support the markets. You're not going to see a V-shaped recovery in the same sense you did in 2020. But you have to think to yourself, is there long-lasting problems? Like real bankruptcies of banks coming? No. Ling Ling for president. I would support that, but thank you. Oh, thank you. She wants to feed me. Here you go. Look. Bye. Bye. So you put down. There you go. Lang. Where was I at? Joe Rogan's running for president, I guess. I support that. But I'll just kind of leave off kind of where I was going with it. The Fed's not our friend, so it's not going to be a huge recovery in the same way of 2020. Trust me. If you buy today, buy tomorrow, you're not going to miss a whole lot in the grand scope of things. But at the same time, you've already seen most of the drop. The odds of us dropping another 10% rather than rallying another 10%. A lot less likely that we'll drop, another 10 to 20%. So that's a bit of good news. And kind of why I say that is because the Fed wanted this to happen, but they did not, I would guarantee, want this to happen this fast. Like I said in the video earlier, what's the last IPO that you've seen? Like, I have not seen one high-flying IPO, or just one in general. I think new, the Brazilian bank was like the last IPO I can think of that people actually talked about. Warren Buffett took a stake in it. But that was still in like February, January, something like that. So you start to hurt the underlying economy a lot, and it does help with inflation at a certain point, but it's not good to have the markets drop 28% now in the NASDAQ year to date. 28.22%. It's not healthy in the first 5 months. So, but there is a lot of money out there still. Crazy talk, in my opinion. Elaborate. I mean, if you guys don't agree with me, I would love to hear some differing opinions. That's how we all source information. But from what I can tell, you've seen most of the drop already, and the markets are firmly. This is pricing in a recession. Like, look at the QQQ more specifically, because the S&P is only down like 6. What's the S&P down now, year to date? Fuck is the S&P down? Ridiculous. Last time I checked, I think it was 16. Yeah, now it's down 17.78%, almost officially in a bear market. The NASDAQ is so far just worse than a bear market. It's ridiculous. If you pull up the chart, this is firmly pricing in a pretty big recession in 2022. So if you even get a small recession, we're already there. We're already, expecting something along those lines. Edward Morgan. Good morning to all of you beautiful apes. Hope you're all doing well, and most importantly, remaining calm. Patience pays, baby. Yes, it does, my friend. Patience does pay. And I hope you and everyone else is doing well out there. I know it's hard out here for a pimp. The stock trading business is, it's not so hot if you guys haven't seen, but it will come back. Not everything will come back, but quality companies will come back. Even AMC, I would consider a much higher quality of a company now than they were pre-pandemic, right? They're better at running their business. There's a lot of things you could point at, but in the end, quality companies will come back and they will do well. Like DraftKings had great earnings. Fubo had mixed earnings, but still not terrible, considering these valuations that they're at. Who else had AMC, DraftKings? What are some of the ones that I specifically own? Square had good earnings. A lot of companies had good earnings, but they still got destroyed. Like SoFi, like great earnings. That stock was up 5% today after dropping 18% yesterday. Like quality businesses like that have some level of staying power, I believe will come back. Now, the thing is, in this kind of market, if there's not systemic problems, sure, things will come back eventually. Yeah, everybody would probably agree with that. This is not the end of the financial system. The question is, how long is it going to take, and what's a better return of capital? If the stock market theoretically took 10 years to get back to all-time highs, but a bond could pay you 3% interest per year, well, it's probably not smart to invest in the stock market. Go ahead and buy a boring bond. That's the question. How long does it take to get multiple expansion to come back into these stocks? That's the question. I personally think we should see a decent size rebound by the end of this year. And surprisingly, if this might be surprising to some people out there, but typically when there's fears about a recession is when you're actually at the lowest point in the stock market, right? That's when you tend to actually bottom in the stock market. When people are freaking out, or a recession's here, it's not usually like at the peak of the recession. Does that make sense? Like even like '08. Yes, it was slow to come down. You really didn't see a market crash here until, Lehman Brothers and Bear Stearns went bankrupt. It all hit the fan very fast, lasted for about 8 months, hit a low, and then you started to recover, right? Yo, where are you getting this from? No, I went to the store, didn't have time to put the food away. Here you go. She got me mac and cheese. This little shithead. Apparently, she wants mac and cheese. So, that's the thing. Usually before a recession or right when it starts, it's usually the bottom of the markets. Like, we were in a recession. Let's go ahead and pull up the... Let's go ahead and pull up the federal funds rate, because we are kind of talking about it. So, I think it's very appropriate. Where... You said Edward marry me. Man, you gonna pull all the ladies with super chats like that, bro. Be careful. Be careful. So, essentially, if we zoom into here, well, maybe '08's not a great example, but we had even went into a recession, and it wasn't that deep at first. Like you can see, the Fed didn't even cut the federal funds rate until deep, like halfway, if not 3/4 of the way through the recession. But the markets actually bottomed in late 2008 when the Fed actually cut rates, about halfway through the recession. But most of the time, you actually get a bottom in the markets when a recession is when there's a lot of fear about one coming, and then once it starts, typically, and then you tend to slowly recover after you're getting deeper into a recession. So you could look at it like that. I do think the markets will probably flush out, but I think it's when fundamentals really start to take a hit. Can you see that, Ling? Thank you. Fruit snack. Yo, this dad life, bro. Win nanny. Yo, win nanny vlog. Huh? AMC needs to hurry up. We can get you a nanny, huh? Yeah. She wants a nanny. And then I'm going to get the nanny a Lambo as soon as my stock portfolio comes back. They're not getting my shares cheap, buying more, but not sure when. Yeah, that's the thing. That's the beautiful thing about right now. Do not take that for granted. I had bought the dip in 2020 when people were saying, this is going to last years, no rush to buy the dip. I'm like, dude, this is the time to start buying you could have bought anything in 2020 and you made 100% within a month or two. Like it was pretty straightforward in that sense. You were having like 8% positive days in 2020 after the 5 to 10% drops you were seeing on a almost every other day basis, right? This is not the same as 2020. So you don't have to really worry about buying everything right now or buying as fast as you can. What's going to happen is we are going to be range bound until inflation comes down, and then the Fed says they don't have to raise as aggressively. If you want to try to perfectly time the markets and buy in as soon as the Fed says that, be my guest. But to slowly acquire things right now is how you will come out of this in a much better situation. You like those? Yeah, Scooby-Doo fruit snacks are the best, huh? I was down 10% today. Yeah, I was down more than that. Like, I'm super concentrated in the stocks that got destroyed today. Which, it's like one of those things I refuse to sell. So I'm just gonna take a major ass whooping. And if I don't like something anymore, I'm still not gonna sell it. Like a firm. I like the company. I want to average down a little bit. My average is way higher than that stock sits right now. I think I'm down like 70% on that stock. Something ridiculous. Maybe 60 some percent. But if I think there's better value somewhere else and I want to add to something a little bit more established or stable, whatever your case is, that doesn't mean I have to go out and sell a firm at a 70% loss. It just means I don't have to continue to add to it. So over time, as you invest more and more and more, and hopefully you guys, if you haven't been told already, the best way to invest to actually, make your stock portfolio look like mountains on a screen, like you can see with the S&P 500, little mountains here, is to put, X amount of dollars in per month. Besides just your 401k. Do that too. Definitely recommend that. But, more food snacks. But, that's how you do it. And then split it up. I like to buy dividend stocks, especially if you're younger. Compound interest. Who said compound interest is like the seventh wonder of the world? Einstein? I think Einstein said that. Because it's true, a small amount over time will turn into a lot of money. So that's really the way to do it. But preferably, I mean, if you could save 10% of what you make $400 a week, save 40. That's all you have to do to amount a great deal of wealth in the next 20 years. 10 years, go faster if you want to, whatever. But right now, bottom line, it's not really the time to throw in everything, but it is time to start buying. You're not going to see a race back to all-time highs anytime soon. Shit, it could be years before we see all-time highs. Einstein did say that. Okay. I was really going out on a limb there. That's what I thought. I think we have a slight run tomorrow and taper Friday towards max pain. A lot of puts that need to be paid out. They will try to minimize that for this week. That is a good way to look at it. Yo, Link, there's no Easter basket. Look. Yes, that is a good way to kind of look at it at this point. We've basically been going straight down. The SPY paints a bad picture, but the NASDAQ paints an even worse picture. It's been straight down on very high volume as of recently. So it's inevitable that we will get a day that is positive, and it'll probably be positive by a pretty decent amount if it's followed by some kind of news. Tomorrow you have PPI data that comes out as well as some Fed speakers, which I think could be even more important due to the simple fact of if the Fed wants to slow this down, the way that they would probably do that is having some Fed speaker come out of the blue, like a Fed Dally tomorrow. You could see Thursday. Where is it? Well, there's core PPI, producer price inflation, and then you do have initial jobless claims, and Fed Daily I think speaks towards the end of the day. What's 15? I think that's military time. 16 hours 22 minutes from now. So like 2 p.m. tomorrow, roughly. Maybe 4, 3, 4, something like that. 2 to 4. I'm not good with military time, but she speaks. And if they wanted to slow down the markets, all they would literally have to say is that, hey, the markets have done a lot of the pricing for us. We're still likely to raise 50 base points at the next 2 meetings, but after that, we're going to see how things go. We're going to look at the data. We're going to take a breather, right? And what that could potentially do is slow down the markets, like I said. But why would that be so big? Well, because the markets are light years ahead of what the Fed has actually done right now. The markets have priced in 4 back-to-back 50 basis point rate hikes as of right now, with like a 35% chance of still getting a 75 basis point rate hike at the June meeting or the meeting after that. So you're pricing in like 2.25% more rate hikes as of right now. The Fed has already raised a 0.25%, 0.5%, 75 basis points. You're firmly pricing in a lot of Fed rate hikes right now. So if they kind of show that they want to slow down, that is likely the route that the Fed would take, is some Fed speaker coming out and saying that, just to slow things down. Because when you kill the economy, not the economy, which they are killing the economy right now, but when you kill the stock market like that, this aggressively, this fast, it's really, really bad for whatever political party that is in office. Really, really bad. Because, I mean, if the Nasdaq's down 28% and you just lost, in anything, like any asset lost money. Besides art, I guess apparently art is popping right now. But you're in crypto, you're in stocks, your 401k, if you're in bonds, everything lost a shit ton of value. You don't think that's going to change people's opinions on voting for a Democrat? They're the ones controlling the show, right? It has a lot of deeper implications than you would think, and this is a midterm year. So there's going to be a lot of pressure on the Fed to tighten and get inflation under control, but not piss off people in the process. Because every time somebody looks at that 401k and they're not as educated as some of us in financial markets, the thing they think is this thing is never coming back. That's how people think. And I know some people in here might think that. Even though that's not necessarily the case, it could take a while. But some people think like a loss is a loss either way, that you might as well sell out. That's why so many people during 2008 sold out at the bottom, because they heard a lot of bad shit and said, you know, it's never going to come up. I might as well just get whatever money back I can. People don't like that, and it definitely affects the way people vote. The Fed is not a part technically of the government, but they listen to the government. That's why like 2018, 2019, stock market was having a fit, right? You guys have seen the chart before. And then Trump pressured Jerome Powell, he was still the guy then, to basically hold off on what they were doing because the stock market had just collapsed. And then it U-turned because the Fed U-turned. But it was pressure from Trump to stop the pain and stop the bleeding. So you need to see the markets coming down, but not this aggressively. So maybe we're not there yet. Granted, we could fall another 5 to 10%. If you're down 38% on the NASDAQ, say in 6 months from now, coming in June, you're going to see the Fed slow this thing down a little bit. And that's when you get some fundamental news. That's when you can actually rally. That's why I think, like Vlog was saying, the rumor, did you confirm anything on the rumor we are near the bottom? That's really the biggest thing you could point to is the Fed will have to slow this down if we fall another 5 or 10%. No way around that. Mainly because of politics, right? But it also has big implications for the economy, like with IPOs. You guys understand how an IPO process works, right? And that's part and part why the economy grew so much in the past 2 years, like 5% per year or something like that, maybe a little bit higher. I think that was 2021, like 5%. Because a big reason of that is when everything is doing fine and everything is dandy, you see a lot of IPOs. You see a lot of SPACs. People go out on equity markets. They raise capital. What do they do with that capital? They take it back to the quote unquote real life. Go hire people. Go make a new product. Go invent something. They do something with that capital. And that helps the economy. So you need to slow that down. But the Fed has completely halted all venture capitalism, all financial markets in general. Like, private markets usually lag public markets, but it's massively hitting the private markets. Now, let's just say, for an example, Robinhood, when they went IPO, was pegged at, I don't even remember the valuation, but like, wasn't it like $75 billion? If Robinhood went public today again, they would be valued at like $5 or $10 billion, like a fraction of what they were a year ago. So nobody wants to go public. And then private funds that are on the private companies, they don't want to raise capital right now because they would devalue the value of their company. Private markets are not like public markets. Every time there's a funding round, you get a new evaluation because you buy 1% of the company for $1 million. Boom, your company's worth $100 million, right? So that's a big reason why you potentially are close to a bottom. Besides that, just the fundamental case here is still, for the most part, intact. Like, companies have not missed earnings bad enough to fundamentally justify what has happened to most of these companies on the markets. That's the bottom line. Until the fundamentals actually match what the stock price has done, you're looking at a big disconnect there, and you're looking at a large potential rally. Ling Ling. Ling Ling. Are you being bad? She got Coco on and wants nothing to do with it. You want to make YouTube video? YouTube video? You want bite? Bite, bite. Sit up. Butthead, baby. Need a nanny? Need a nanny or a wife at this point? Nanny or a wife? Going once, going twice. I got a portfolio that's down like 50%, but you know, it'll come back. It'll come back. We're good. We're good. We're good. Ken Griffin. What's with the clown? Are you calling me a clown, bro? I don't appreciate that. One year ago today, I bought shares at $9.71. Suck my mask. Well going. May 10th. That's very symbolic. I got in at are we still squeezing late summer? I mean, I don't know Adam Aaron and like his plan of, you know, Catalyst, what they plan to do. Last time we knew they were looking to acquire stakes in as many as five different companies. Looks like a very attractive time to buy the dip, in my personal opinion. That should be seen as a very positive catalyst, or any of the other catalysts that they're currently working on. So, uh, in this market environment, yes, I like to say end of summer, fall, because it's not going to be one of those things that, interest rates become very cheap, and it's not like it was a year ago. That's the big difference. And even on the put side, right? The market maker hedging activities like gamma squeezes or reverse gamma squeezes. What you're seeing right now and what's really driving down a lot of stocks, including AMC, is all of the put activity. But that's not reflected in the short interest, but it still plays a very big role, if not a larger role, during you know stock rallies than even what the actual short interest is, right? We've all heard gamma squeezes are, a bigger deal than short squeezes. Like, you hear a short squeeze, you're like, okay. You hear a gamma squeeze, you hear the option chain is loaded up, and you feel a little bit different about it. You're a little bit more gung-ho for it because you know what gamma squeezes can do, right? It works the same way to the opposite side. So even though the short interest is 21% on paper, what's the short interest, including all of the puts the market makers had to go out and short stock on the open market? What does that account for? Another 20%, 30%? What's it account for? That's a really big question that I don't have an answer for. But another reason why a small catalyst could be a big deal for the stock. I don't know when exactly, a catalyst will come out. I can't mark the day, but that's where I have my money bet on. If it doesn't happen by then, I mean, I'm still in there like swimwear. I got you, okay? This is your last fruit snack. Okay? Look, check this out. Knuckles, pound it. She gives Knuckles. Knuckles again? There you go. Now I just need a son. Both are expensive. Yeah. Nannies and marriages. Yeah, I mean, I don't know from personal experience, but I could tell. You okay, Ling Ling? Jeez. This kid's scary. Oh my gosh. Be careful, Ling. She'd be putting like 4 fruit snacks in her mouth at once. Here, take one. One. Don't feed the dog. Man, you're expensive too. Shoot, I could have bought like 10 shares of AMC at the price I spent at the grocery store today. That's crazy. All right, look, we got Coco on. You want to say bye? Bye. Say bye. Say bye. Say bye. Pound it. Pound it. Pound it. You're cute. All right, let's watch Coco. Oh, uh-oh. 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 I'm squeezing right now. May take till fall. Yeah, feel you, bro. 3 rings of marriage, bro. Engagement ring, wedding ring, suffering. Oh, man. I'm sure that's how the females feel. Suck my mask. I don't know if you're married, but any married females in here? Is that how you guys feel, or is that just like a guy thing? I've never heard a female perspective on marriage. Wedding ring and suffering. Suffer. Man. We might MOS next week if the markets keep falling. Possible. Every day the markets fall, there's less collateral, there's less liquidity that these funds can use to service their short positions. Like, what was it? I think it's Tiger Global losses. Tiger Global, hit by 17 billion in hedge fund losses, has nearly depleted its latest venture capital fund. Like, dude, Tiger Global is getting destroyed. These other funds are also getting destroyed. Like, they're not the only ones. So, you know, pound the like button. Yes, I like it. I like it. Just pound it. And punch your phone if you have to. Just get the aggression out, but make sure you hit the like button at the same time. You know. It's just me and the cats. I'm not interested in real humans. They scare me. I feel you. These females, man, they scare me too. TCI saved my marriage. Well, I am honored. If that is legit, I mean, let's make you rich, brother. Let's make some money. It's about that time. We could use a couple dollars. Shit. Can we could use 3 to 5% to the upside. I know it's asking for a lot. You know, the Nasdaq has dropped almost 29%. But, I mean, 3 to 5%, I think we deserve that at this point. Just slow it down. Just slow it down. Like, at the same time, it's very hard to hit, like, puts or obviously calls. But even on the put side, it's very hard to actually hit, like, have a good risk to reward. Like, normally, in a market, like the COVID crash, nobody expected COVID to like shut down the economy this fast. So premium was cheap, right? It's just like, think about it. When you get car insurance, why does car insurance cost so much? The fundamentals behind it, not, you know, the fact that they just overprice and rip you off. I get that. Trust me, I'm in the same boat. It's a ripoff. But why do they price it? Or how do they price it? How do they price home insurance, right? Why, if you live in a flood zone, you have higher insurance? It's because it's riskier. There's a higher probability of that max pain, right? Your house getting destroyed. There's a higher risk than if you live in a desert, right? To a river flooding or something, right? So the higher the risk, the more you charge for insurance. Options are insurance. So if the stock market is moving 4% on the Nasdaq, or 3% one day, 5% down the next day, you know, down 4% the next, down 2 the next, up a 0.5%. They start to price insurance premiums very, very expensive. And the way this market is, it's moving around a lot. Are you gonna go to sleep tonight? No. No, we're good. That's enough fruit snacks. But they start to price it very expensive. So when you're seeing just intraday stupid moves, like $10 moves on the S&P, like we went to 404 today. I believe, was it 404 today? Okay, Ling, you're doing too much right now. Like 404 and closed at 391.96. You moved $13 in the S&P. Get out of here. They don't even know where to value these options because there's no direction. So they overcharge on calls and puts. They just make sure they're not. Okay, jeez, girl. You're getting a little bit aggressive. I don't like it. I don't like it. You're a coco. Here you go. Baba. Baba in bed. Jeez. So, like I was saying, they start to overprice everything. Oh, she did the Bud Light like that? Oh my gosh. Oh my gosh. So they start to overprice everything. And it works the same way as home insurance, car insurance, life insurance, or anything else. Depending on the risk or the perceived risk is how they price things. So even trying to play the downside right now, like if something is unexpected, $100 could turn into 10,000 pretty damn easily. If you were to catch a COVID crash, possibly more than that. Shit, if you caught the COVID crash, which I did not catch the put side, I actually played the bond market and did well. You can get paid out massively when it's unexpected. Like imagine if you had home insurance on $1 million house, it was in the desert, just there was like no risk factors, right? For an example here, I don't know what $1 million house kind of insurance would cost, but if you pay a little bit and then a damn random tornado fucks up your whole house, maybe you paid like 10 grand for insurance, but they're gonna rebuild your house for $1 million, right? You got paid out pretty big. It made sense in that case. It worked, right? That's kind of the way it is. But if you're used to this back and forth volatility, just everything is out of whack as far as pricing. I will say though, if you go out further, like something I am specifically looking at right now, and I think is very, very attractive, is Spotify. Well, a couple reasons why. I think Spotify's a good middle ground of like growth, but also like established growth. Like people know about Spotify. It's got a $17 billion market cap, but it has gotten absolutely destroyed. Spotify Technologies. But look at the insider buys. I don't know if it'll actually pull it up. Oh, it's not going to pull it up right now. I actually seen this on CNBC today. The CEO of, is this? Yeah, this is Spotify. The CEO of Spotify, he just bought $50 million worth of shares. I believe he owns a substantial amount of the company as well. So that's a really good sign. But also the premiums on it. Like if high quality companies do bounce back, which I consider Spotify to be, in a relatively short amount of time, say the next 6 to 12 months, you can get very attractive call options on this. I was looking at it earlier, like even like a June bounce. Like say we bounce within the next 6 weeks here, 5 weeks, 6, 7 weeks, something like that. I mean, the stock's at 91, 94. It used to be at 300. Could this thing bounce back to 115, 120 pretty easily? It's at 91, 94. Probably. And they're only going for 140 for the 125s, 164 for the 120s. So I kind of like some of the longer dated calls and the way that they are priced. I don't think they're too outrageously priced. Like in October 2022, 150 call, trading around 300. I don't think that's bad to play potential upside momentum here in the next 2 to 3 months. Any longer than that, the stock market stays down 2 to 3 months, you will lose more than likely on that option. But all right, Ling-a-ling. You're a butthead. Can you go sleepy? Her mom, this kid's mom said that she had a nap today. She did not have no nap today. Come here. Come here. Wait. Come here. You're a wee. Ling. Can I have a hug? Can I have a hug? Can I have a hug? Nanny? Say nanny? Say nanny? I've held for 15 and 4 days, months, but who's counting? Oh my god. All right, wait. It's time for bed. Time for bed. Help us, Ling Ling. Help us. Help me. 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 No, it's so funny. Let me tell you guys a story about that. Help me and Ling Ling. Here, look, Baba. Let me tell a story about you. There. Such a shit tag. Baba. Okay. No Baba then. There you go. All right. Let me tell you guys a story. Buy or sell, Ling Ling. She said, So I think that's a buy. But apparently, her mom had taken her to a store. I think it was Walmart. And, stop. No. And apparently she wanted to, like, walk around and do her own thing. So she had to pick her up. And she was screaming and crying, saying, help me, help me, help me in the store. And everybody was like staring, like she was kidnapping her or something. Help me. Stop, Ling. All right, I'm going to have to get off here, guys. Thank you for tuning in. Daughter is just going nutty. So you guys enjoy the rest of your night, and